The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the December 27th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let those fingers do the walking. That's right. You can send me an email, steve@tfnn.com. Just in the subject heading, please put radio show question. And, of course, in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading down 353 points. That's about 1.5% to the downside. Trading at 22.5 1/4. S&P's off 41. NASDAQ down 145. Russell down 24. Semis are off 15. If you were just waking up after being asleep for really just a month or two, you would think that this sounds ominous. Sounds ominous. The Dow's down 360 points. The S&P is down 42. Well, let's go check it out and really see what's happening. Here is what we know about the markets. Today is neutral. Today is a neutral day, at least as of 1 o'clock in the afternoon. Why? Because prices trading in between resistance and support. And it's clear where they're at out here. Let's first take a look at resistance. Why? Because yesterday's magnificent rally at this stage of the game, as of 1:09 in the afternoon, is nothing more than a counter trend move. In order to prove that it's something more than a counter trend move, it needs to move above your red line. If we take a look at the ES Mini, the NQ, the Dow, and the Russell 2000, what you're going to see is in overnight action. After yesterday's wonderful trading day, price found resistance at Stevie's red line in each of these indices or equity futures contracts. That is resistance. That is the level for both bulls and bears to be watching. Now, in the case of the ES Mini, that number is 2476 and change. So give it a point or two, say 2477, 2478. The reality is, a clear close above it says there's more upside, there's at least more counter trend rally, or that it could have been a major bottom. Either of those. At this stage, nothing more than a counter trend rally. The same holds true for the NQ. Its red line number is 62.59. The Dow equity futures contract, 22.998. And the Russell 2000 is 13.31. Again, those numbers are going to change by a point or two, but you can clearly see where resistance is. If somebody tells you it's someplace else, tell them they're smoking something. Tell them they're not familiar with Stevie's red line. That's really all that you need to know. And it's an extraordinary tool out there. You get to see it in action all the time here at TFNN.com or inside the newsletter service, Mastering Probability. Well, if that's resistance, where is support? We have support really in two different areas. The first area is the one that you and I took a look at yesterday. We gave you numbers to be paying attention to, where if price was trading above or below, and this is back to the futures contracts, back to the future, that's right, with Michael J. Fox out here, and that number is 24, 20, 23.75. We're trading at 24.28 in the ES Mini. It is 61.0150 inside the NQ. We can see how earlier this morning, back at about the 12 noon time frame, price came back there, tested it. That is a support level. Inside the Dow, it's 22,503. We're trading at 22,513. And inside the Russell, it's trading at 1,300. So we are trading in between support and resistance. And I have no idea which way prices are going to break. All you need to know is that if price breaks down through support, you can expect lower price. Now, we can go try to gauge what that might be. We can project what that might be, and we'll go ahead and do that. Likewise, if price trades above Stevie's red line, we can then figure out the pattern associated with that. And in both cases, quite frankly, we can use A to B equals CD, the price projection tool. I'm not talking about the Progressive insurance price projection tool. I'm talking about the lightning bolt price projection tool. Now, there is one other level, and Jay inside the Tigers Den wanted to understand where the TAS market profiles were. Well, there are new profiles. That means, in essence, we have two levels of support. We have Stevie's purple line out here. That's perigee. And then what we also have, we look at the daily equity futures contract, is a set, and I do mean a set, of TAS market profiles. The daily on the ES Mini is the one for you to be most focused on. Why? Because prices tested that. That meaning 24.17. That is the key level of support. A close below 24.17 today suggests that price could go all the way to the bottom or lower. Now, we'd look for some intraday patterns out there to suggest otherwise, but at least from a daily standpoint, it would be 24.17. A close below that, and you would anticipate lower prices to come. It's got to be a close below it. Now, you can see by taking a look at charts 2, 3, and 4, that's the NQ, the YM, the Russell 2000, price is not near support. So it's really going to be all about the ES today with regard to trading between resistance and support. So you've got Stevie's red line for resistance. You've got the TAS market profile. You've got perigee in the ES Mini. It makes it very easy. Neither of us, none of us, any of us, I don't really think, know which way it's going to break. So being down 418 points from an equity futures contract, it's really not a big deal. In fact, inside the Dow, it really hasn't tested support at 22,087. That's what it has to break in order to say, okay, the kibosh is on and we're headed lower out there. And that's what's going to make this a little bit unusual, because the ES Mini that is there early on support, and we'll have to just try to navigate, hey, if the ES Mini moves below support, maybe it's going to find support when the NQ, the Dow, the Russell 2000 test the bottom of their profiles. I don't know. I don't know how this game shakes out. I do know that if price closes above Stevie's red line, that's a whole different, entirely different message that's out there, and probably the A to B equals CD patterns out there. So we get back for this first breakout here. Let's go take a look at some of the requests that have come in on the hotline. That's the Let Your Fingers Do the Walking hotline. And I think Bob wants to take a look at silver, Hi-Ho Silver, the Lone Ranger, natural gas, and then we'll see if anybody else has sent in any email requests at steve@tfnn.com. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So an impressive day yesterday, certainly with regard to candlestick signals, the move. We have 2.5 days left in the trading year out here. And to put yesterday in perspective, the 1,000-point move out here, in the next 2.5 days, the Dow needs to have 2.5 of those in order to get back to the 2017 close of 24,719. Just subtract 24,719 from about 22,483, and we're somewhere around 2,200 points. So we would need 2.5 more of those days out there in order to then say that we don't go back down and test the lows or make even a lower low in the coming year. So that's what it's to prepare for. And I'm not saying it's not going to happen. It needs, what, about 860 points, give or take, just to get back inside the consolidation. That would be above the 23,360 level. Now, that's doable. Whether or not we're going to get a 2,200-point move between now and December 31st, probably not likely. But, hey, anything can happen. Speaking of anything can happen, just kidding. Let's go take a look at what Bob Y. wrote in. Bob says, "Hi, Steve. Great show." Thanks, Bob. Please give us your take on silver. I am long. Also, how about natural gas? I am out right now. So let's go take a look at both of those for you. Try to get a feel for what they are doing. If we take a look at silver first, let's begin by taking a look at 4 different time frames and their profiles out here. And the 4 different time frames are the 60-minute, the 240. So we got a 4-hour, a daily, and a weekly. Now, what you'll see are green bars, green shoots. So that tells us that price is above resistance on all those time frames. Resistance, at least as far as their market profiles are concerned. And that being said, without seeing any other resistance out here, price is ready to move higher. Now, that's what that says. What we also ought to do is open up the chart. Let's get some more left side information out here. And in the case of silver specifically, what I have opened is a daily time frame chart, because what we want to do is try to measure approximately where the run might run out of gas, if it's going to. And what I see when I take a look at this chart, Bob, is I see the low out here on the trading session of September 11th, and then a test of that low on November 14th. And what that does is that really sets up the bottom. People will call it a double bottom. You don't know if it's a double bottom until the swing point at the top might be broken through. What we do know is when you see that, it is a candidate for a consolidation pattern. And that's what we have there. We also then see the consolidation pattern because there was a high on October 2nd. Price pulls back, tests the bottom of its daily profile, by the way, find support there. We see another high in the trading day of November the 2nd. Price does what? It pulls back, it breaks through a profile out here, weight still forms a new profile at that swing point on November 14th. So there's a clear consolidation pattern that you and I can draw in here. So let's go ahead and do that. Let's draw in the consolidation pattern. There it is. And then what you and I can do, maybe I've missed it just by a tad, we can just double it. Let's just go ahead and copy that. Let's paste it, and there you go. So here, just simply from a consolidation standpoint, this suggests to you and I, because price is broken above that what we're looking at is a run to about the $16 area inside of the current contract, the March contract for silver out there. So you're long. I would say at this stage here, remain long until we get some other information. We do have a caller on the line, so let's go out there, and then we'll come back to natural gas. Oh, I didn't do that. Did I do that? No. Let's go to Sam in Philly. Sam, thanks for calling. Thanks for holding. How are you today?
Good. How you doing?
I am doing very well. Thank you. How can I help you? What do you want to look at?
I'm looking at Johnson & Johnson after the recent drop. I'm thinking about buying it at 122. Does that look like a good price?
And 122, how did you come up with that? Is there any specific thing that you're looking at that says 122 is the place to go ahead and get the buy?
Yeah, this is near the candle on the 26, the bottom wick, so around 122. So I'm thinking about if it goes down to that area with low volume, that might be a good price just to get in, maybe like 30% of what I want to buy.
Got it. Okay. So what you'd certainly like to see in the case of Johnson & Johnson is some type of pattern that might set up there, some type of support, something. And is this for a longer-term holding position, Sam? Is this a...
No, for like a month or so.
A month or so? Okay. So with regard to support, the only support that I see in the 122 area is the bottom of its monthly TAS market profile box. That happened to hold the support. That number, by the way, is 121.59. So are we going to split hairs about 122 if that's where you want to fire away versus 121.59? No, I'm not going to split hairs with you there. What I would suggest, though, is if you see Johnson & Johnson close below 121.59, at least for probably 2 days in a row, that would suggest that 122 or 121.59 wasn't a level of support. And that's just simply by taking a look at the monthly time frame chart. If I pull over my other set of tools out here and look for possible support, today's going to be a Tom DeMark setup 9 count. And I would say I'd go maybe one candle earlier, which is where that big drop was, and I would maybe use the bottom of that. So that gets you back into the 121.59 area where your back is up against the wall, so to speak. And then what you'd want to do, Sam, is you'd want to see price coming into that level and doing it with lighter volume, which should be relatively easy to do. But the lighter volume I'm referring to is volume of less than 7.5 million shares out there. So I'd say, maybe be patient, and maybe it's 121 even Steven as a level out here.
But if it takes off up from there, but it doesn't look like it. It's like
Well, the thing is, so take yesterday as an example. In yesterday's case, you and I could pull out a lot of charts, And what we could see would be some type of bullish reversal signal. Maybe a key reversal day, maybe a bullish engulfing, some type of candle session that says that, okay, maybe there's a bottom in. In the case of Johnson & Johnson, we don't have that. It was simply an inside day. It was the body of the candle traded inside the body of the prior day. So what we don't have here is kind of the reversal signal message inside of Johnson & Johnson. Not that it can't take off, but we don't have what we received yesterday in the case of Apple and other type of charts out there. So that's why I would be maybe a little more hesitant.
Yeah, I agree with you. It's not like a bullish engulfing yesterday. It didn't go above and below. If it went above and below to encounter the bearish candle before, that would have been like bullish engulfing. But it's not. You're right. Yep.
Yeah. So that's why I would just say, if you're taking yesterday's action as an example in the general markets and saying, okay, maybe that's a bottom for Johnson & Johnson too, I don't see the exact same set of circumstances. Okay.
Absolutely. I wish we had a follow through today going up, but it did not. So.
But it's pulling back to support too. So the bulls may have the upper hand here. I don't know who's got the upper hand right now. Hey, Sam, thanks so much for calling, and happy holidays to you.
Thank you very much.
Have a happy New Year.
Happy holidays and happy New Year.
You bet. We'll be right back, folks. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN has launched our best sale of the year. The Tiger Dollar end of year sale runs through December 31st only. And right now you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, as Sam and I were talking about Johnson & Johnson, here's the example. If we take a look at the candle from the Dow yesterday, and you can see that was a key reversal session, bullish candle all the way. Because you had the high and low of the prior bar that was passed, you certainly closed to the upside, and it was in a stretched market condition. Now, Sam said something that he was hoping that there would be follow through today. Recognize that where price stopped inside the Dow, and I'm just using the equity futures contracts out here, but recognize that you would have anticipated that price was going to stop there. Doesn't matter whether it took 2 days or 1 day, in essence, to get up there, which it pretty much was a one-day wonder at this stage. And that is resistance. You would expect it to struggle to get over that resistance level out here. And that's all that it's done. The thing is, I don't want bears to think like get overly confident in the bearish call by saying, hey, that was a one-day wonder. Price just ran out of gas. That's it. That's not the case unless we see support broken through. And when I say broken through, we go back and take a look at the equities futures contract. Prices, in essence, in the ES mini is trading right at support. And it's really only the ES mini that we've got the support level. Yes, we've got Perigee and the other contracts out here. I would be watching the support level of the ES mini, which is 24.17. We're trading at 24.19 right now. So neither the bulls, this is still bullish. It's bullish from the standpoint you have bullish reversal signals at the completion of patterns yesterday. Big time. I know somebody else uses that word big time, but we just simply do. And what price has done today is pulled back to support. If it breaks through support, closes below support, then you've got a retest set up for the lows again, at least in the ES mini. Maybe not the NQ, maybe not the Dow, maybe not the Russell 2000. So this just happens to be at 1:30 in the afternoon. This is a no call right now. It's where bulls and bears need to be watching the screen closely, of course, depending on the time frame it is that you use and that you trade out there. So I just want to make sure that I got that clear idea across and that maybe nobody misinterprets. Of course, I just do the best that I can. Now, let's go back to Bob Y's question. Well, we took care of silver, I think, for the most part. We could see a clear consolidation. Silver breaks through the consolidation. We just use that measured move. Doesn't mean it stops at that price. Just means that that's where it is likely going to go ahead and head to. What Bill also wanted to do, Bill or Bob, I think it was Bob actually, what Bob wanted to do, but maybe Bill does too, is to take a look at natural gas. So if we go take a look at natural gas, now in this case here, Bob Y was not inside natural gas, inside the contract, where it's right here in front of me. So let's go take a look at it. Now we're looking at the February contract. I believe that's the active month that is out here. And what we know about natural gas is that it's funny. What? No, we know about natural gas as a tested support. Last week, one of our tigers, Z inside the den, was looking for a call or an entry point inside of natural gas. And what we had pointed out last week was price had pulled back and tested the top of its weekly profile, and it held. What we've seen take place since then now is a test of the bottom of that profile. That is 3.252. Price is trading back above the top, so you have a successful test of support. It's possible that the ES mini will look like this tomorrow. I don't know. But so far, what natural gas has done on the broader term, the weekly time frame out here, is tested support and it's held. We don't really have a test of support on the daily or the 4-hour time frame out here. All we really have is some prior resistance, the bottom of their boxes. That's at 387. That's at 356. If we take a look at Stevie's other set of charts out here, or chart out here, we take a look at Stevie's red line, and it is red right now. What we know is that this turned red yesterday, went from green to red. Now, the solid line is the daily Stevie red line, and the stair-stepped one, which is both green and red, the dash one, is the weekly time frame. It doesn't matter that they just happen to be kissing right now or very close to it. What matters is the fact that the green line turned red yesterday. Now, Bob, what we typically see here over the coming sessions, I don't know if it's 1, 2, 5, 10, but over the coming sessions, price and Stevie's red line should catch up with each other, either because the red line's moving lower or price is moving higher, or the combination of those two. But it does suggest to me we should see some slightly higher price moving into Stevie's red line. That's, in essence, what I would be watching for next. So that's the message of the weekly. And the message of the daily comes from this set of tools right here. And I hope that helps you out with regard to what your next move might be inside of natural gas. We also have a request out here from John F. in Sarasota. John wants us, he said he wants you to choose, you people in the audience. He wants you to choose between, I guess, between Miracle Whip or mayonnaise. Which do you choose? That's the choice out there. As we come into New Year's Eve. What he really wants you to choose, though, is between HRTX. Let's go type in HRTX. That's one. And the other symbol he wants to look at is FRFHF. Well, let's go take a look at what Heron Therapeutics, let's go look at its chart pattern. And if we take a look at it, let me type it in on the other system out here, HRTX. And I'll even type in FRFHF out there. Okay, so we've got that going. So here's what we know about this instrument, John, in Sarasota. You have a brand new daily profile. So similar to the ES Mini that we looked at, you've got a brand new daily profile out here. And that daily profile shows that it should have support in between 2178 and 2551. That is your level of support out here. The bad news is it's probably going to go test 2178. I know you say, how can you say that, Steve-O? And the way that I would say that, the way that I would express that, would be just looking at my Ninja Trader chart, by looking at my red line value. And what we can see right now is prices trading below 23.31. That is Stevie's red line. It says this still has a falling price oscillator below zero out here. Yesterday was a bullish signal, even though it doesn't show up on my chart out here. It was a 4-candle morning star pattern out there. So that says ultimate support is going to be the session from 3 days ago, the actual low out here. So it is trying to find a bottom. But at this stage here, trading below Stevie's red line says this probably heads back and it tests the bottom of that profile. Now, that's not the low of the session from the trading day of December 21st. That low was 21.25. Maybe it tests that. Here's what I would be looking for, because price right now is trading into the top of that session. That was 22.76. The low so far today, 22.68. Volume today, 326,000 versus 2 million. That's a good thing. That's a good thing. But price here needs to close above 22.76. It's at 22.83. So if you get that, then you've got a mixed message, right? Because you'd have a rejection of a swing point on lighter volume, but you're trading below Stevie's red line out there. It says you've got to be cautious. Ideally, if this is a bottom, what you would see out here, John, is you would see some kind of sign of strength eventually. And you don't have that inside of this equity. And when we take a quick peek out here at the weekly time frame and the monthly time frame, it says you've got to be cautious on the Blue Heron Therapeutics out there. Steve Rhodes with TFNN. We'll be right back. Wait for a sign of strength. That's volume and wide price spread. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So let's go take a look at this Fairfax Financial Holdings for John in Sarasota. And John, in the case of Fairfax, what you can see, and this is a monthly chart we're looking at, this has been in a real long-term consolidation from March of 2014 through now. And price is testing the bottom of this consolidation. Also happens to be testing the bottom of its market profile at 423.61. So the volume this month, we only have 2.5 days left, is 185,000 shares. So it's a very thinly traded stock, and it's going against the prior swing when it was down here of 629,000 shares. So odds favor that this is at or near a low out here, and I can see taking a trade on this. You know, from about the from this area here, and who knows whether it will get all the way back up to the top of the consolidation in the 575, 600 area. But that's what I see when I take a look at the longer term or monthly time frame. On a weekly perspective, out here, we have a shortened week. So, you know, how do you gauge the volume? June of 2017 was 241,000 versus 38,000 this week. But go look at last week, it was 88,000. So it's light volume coming back into this area of 415 as well. On a daily time frame, do I have any kind of bullish signal out here? The answer is no, I really don't. If anything, it's more of a bearish signal, meaning that price has been struggling. It's been testing the bottom of its profile and just simply can't get over it. Maybe you're better off waiting for this to prove itself, unlike the prior equity where we said we need to see the sign of strength. Well, you'd still like to see a sign of strength. At least this case out here, you'd like to see it close above the top of a market profile. It hasn't done that since October 9, 2018. Well, I take that back. It did it for 2 days, December 3rd, 2018 out there. So this one, yeah, maybe. I would say you've got to get the market right too, right? You've got to get the market right too, or it would help to get the market right too. Everything doesn't go down at once, everything doesn't go up at once, but you'd sure like to have the proper general market conditions. And one of the things that I shared with everybody earlier was I said, in order for the Dow, yesterday was a wonderful day. It needs 2.5 more wonderful days to get back above the close of 2017. And if it doesn't do that, odds favor, just an odds thing. It's a high probability thing. odds favor that price goes back down and tests the lows next year. I don't know if that's January 3rd, 4th, 5th, February 4th, 5th, 6th. I don't know what the date is, and it can push lower than that. In that case there, maybe you're better off just sitting tight until you see that sign of strength. So I hope that helps you out. We've got 3 more questions that have come in, so let's go to those here. Doug wants to take a look at Microsoft. So MSFT out here, the #1 holding now inside of the NDX 100, overtaking Apple from a weighting standpoint. So as we take a look at Microsoft, what I don't know is whether you're long, you're short, or what you're doing. Here in the case of Microsoft, from a daily standpoint, you too have a brand new daily market profile. Microsoft pretty much represents what we took a look at yesterday. What I mean by that is you've got a key reversal, a bull sash candle out here. You've got everything. But what you don't have, unlike the equity futures contracts, you don't even have a test of Stevie's red line. In order for Microsoft to get bullish, that is a level of resistance that price must overcome. That being 101.22. So you've got a bottom signal here, no doubt about it. But what we don't have is some type of confirmation out here. And that's when we take a look at Microsoft. What would I do? I would wait and watch to see what happens with regard to the bottom of this profile out here. It's 97.02. We've been down to 97.13. If you close below 97.02 today, it says you're going to go lower, maybe to retest the lows from yesterday. That's what I see when I take a look at Microsoft, MSFT. And by going lower, which it could do, if we use the Dow, if we use the Stevie Dow, D-O-W, metaphor for the markets, that if we don't close above 2017, we're going to go down and test the lows, we would say that Microsoft is likely to go all the way down to 89.99. It's not a blue light special. It's the bottom of its monthly profile out there. So I hope that helps you out, Doug, with regard to Stevie's view on ticker symbol MSFT. HD out here wants to look at, and I'm not referring to Home Depot, wants to look at, as long as you're looking at silver, would you be kind enough to look at GPL? And the answer is absolutely. So let's go take a look at Great Panther Silver. Great Panther Silver has that wonderful high volume, high monthly bar out there that maybe at some point in time it'll eventually get out there. I think it's in like the $5 area. But if we take a look at Great Panther Silver, looks basically disgusting on the monthly chart out here. Yeah, just basically disgusting. No support. Back through an area where price had broken out. Not really that good. Oh, here's that high volume monthly high, and the price point out there, 504. Pretty good memory, right? I don't know if it's ever going to get back up there or not at this stage. It should. Now, the weekly looks pretty good. The weekly looks pretty good, HD, because it's back inside its market profile. What you'd like to see it do by tomorrow, the end of day, is close above the 58 level. You're trading at 62. If I look at the daily chart out here, what's the daily chart? Daily chart says we don't have a sign of strength. Zippo, nada, zilch. And silver's doing pretty well. It kind of has to make you say, something to think about. This thing, maybe it's under accumulation. That's about the best case that we can say, because it's just simply been moving sideways, right, between a range out here. And the range is about 62 cents down to about 53 cents out here, but no signs of strength. You had a high volume bar out here, but price was actually pushing lower on December 21st out here. So are you asking me, should you buy Great Panther Silver? I'm going to guess there's better silver companies to take a look at. Now, Pan American Silver, I don't know, I haven't looked at it, I can't remember. This chart looks a whole heck of a lot better than Great Panther Silver looks, at least to Stevie. This thing, at least, it's not consolidating out here. I'm not necessarily saying it's great, but it's trading above the top of its profile. It's got resistance clearly at 15.59, so you have to do the reward risk on Pan American Silver. You can see how 15.59 has contained price ever since the trading session of September 4th, 2018 out there. But with silver looking pretty good, you've got to ask yourself, why isn't Great Panther looking that good? So HD, I hope that helps you out with regard to Stevie's take on that. Les J writes in, Steve, if you have time, we're going to make the time. Could you go to Costco? What do you want me to get for you? I love going through Costco, don't you? Always so much stuff that you can buy that you don't need. That seems like it's a good deal. It is a good deal. But you wanted me to analyze Costco. Well, that was sort of my analyzation. What is Costco? What is it? Did you put in the symbol here? You didn't. You'd think that I just know this on the top of my head. What is Costco? CSCO maybe? Now, what is it? I can't. Cisco. That's Cisco. No, let me see if I can find it. Cost. All right, thank you. Oh, you've got lots of wingmen out there, and that's a beautiful thing. So we come back from this break for Les J. I'm going to go do some. What's your favorite thing to get at Costco? What is your favorite thing to get at Costco? Wine? King crab legs. That's the best deal. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So now as a 154, we've got what looks like a clear break in the ES of support, that being the bottom of its market profile out there of 24.17. Watch that at the end of the day. To go back to Costco and to buy some Alaskan king crab legs at $19.99 a pound. They are so good, so easy to cook. You just buy them, you take your knife and you just cut open the shells on both sides, stick them in the oven broiler for about 20 minutes, a little bit of butter, and I mean, it's great. It's great. Go to a restaurant, the same crab leg, they're going to charge you $40 or $50, you know. In any event, Costco, if we're going to take a look at Costco out here, if we look at this one chart, this is the monthly chart since 2000, the 2009 bottom. What I want you to look at here, Les, I want you to look at the bottom of the monthly profiles. I want you to see how on this move to the upside, we have never seen a close below a monthly profile. This says if you're looking to get in it, then get in it to win it. And now would be about the time. Or the bottom of that profile, which is 187.26 out here. It still has held. Just like we looked at the daily profiles, we'll look at the ES tomorrow. Where's the close on a daily basis? If you were to close below this, because your back is sort of up against the wall on Costco, then that says you know to exit because the pattern has changed since the 2009 bottom. With regard to the daily time frame out here, if we look at when Costco made a high, the high out here, in essence, took place on the trading day of November 7th, 8th, 9th. You had that Tommy DeMark setup 9 count. Now, I'm going to do a workshop for subscribers on January the 8th, I believe it is. It's a Tuesday. I think it's the 8th out there. So if you'd like to learn more about that system, it's an excellent system. We used it yesterday to be able to allow the markets to communicate that we were going to see a rally. We saw a gigantic rally, as you know. Look at Costco when it bottomed out here on November 23rd, a Tom DeMark set up 9 count. Well, guess what you're going to get today? You're going to get that 9 count out here. And that says that yesterday's low may be the low. Folks, thanks so much for being here. We've got a wonderful hour of tunes, where Basil and I will be singing songs just for the new year. Just kidding. But stay tuned. Tom O'Brien coming up from 3 to 5. I'll be back with you tomorrow. Have a terrific Thursday. If you're traveling, be safe out there.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.